首先，劳拉提到，中国股市的质量正在显著提升，尤其是在优质公司和股东回报的改善方面。他特别指出，过去12到18个月，很多中国公司在提高股东回报上做出了积极努力，比如通过更高的股息分配和股票回购等措施。此外，劳拉还强调，股市的结构正在发生变化，周期性行业的市场份额正在逐步下降，而技术创新和高质量公司的崛起正成为新的投资亮点。接下来，劳拉讨论了中国在人工智能领域的技术突破，认为这些创新将为中国经济带来更高的生产力和效率。他认为，技术的发展将推动中国成为全球科技竞争的领先者，这对投资者来说无疑是一个重要的信号。最后，劳拉还分析了中国与全球资本市场的关系，尤其是在美中双边关系和地缘政治变化的背景下，如何影响投资者对中国市场的信心。他指出，尽管市场情绪在近期有了明显改善，但许多外国投资者仍未完全进入中国市场，这也意味着市场仍有巨大的潜力等待开发。接下来，我们将详细回顾这次访谈中的主要观点，分析这些结构性变化如何影响中国股市的未来走势，以及投资者应该如何应对这些变化。关注本频道，跟我们一起掌握最新动态。
For a very, very long time, we've been holding a relatively cautious view towards China. But when we see structural shifts coming, we want to be really pounding the table and let investors know about that. We think there are two very major changes are happening in the China equity space, which global investors may not be able to yet catch up with. Number one, there is a very significant quality improvement for the ROE for China equity market. If you look at MSCI China, the ROE for the market index actually had effectively troughed in middle of 2023 and has been gradually catching up with the MSCI EM ROE. And what has caused that improvement? Actually, there are multiple reasons that investors may not have really realized. Number one, it's basically the very diligent self-help effort from the high-quality companies and the shareholder return enhancement activities such as share buybacks and paying higher dividends, etc. That's been going on for the last 12 to 18 months already. And then the second reason is the composition of the equity space in China has been going through a gradual shift, with these high-quality, highly diligent companies taking up much bigger market share versus the sectors that are highly cyclically correlated and being dragged by the deflation environment. I'm specifically referring to sectors such as properties, materials, and conventional industrials. So collectively, they are now representing less than 10% of MSCI China's universe. So that's a very structural shift. And number three, I think basically the technology breakthrough that's happening in China right now and which has pretty much caught everybody off guard. We think there is more monetization opportunities and potentially productivity and efficiency improvement that could be brought forward on a broad basis. And China has significant leading advantage when it comes to the adoption phase with its very deep pipeline of engineers, its very well-established ecosystem enabled by the hyperscalers, and basically very good access to data and then support from the government from a regulatory environment perspective. And then I guess on the valuation side, it's a big deal. For the last 24 months, we see MSCI China being traded somewhere between 8 times to 10 times forward PE for good reasons, deflation, tax restrictions, and geopolitical tension, etc. But just over the course of the last several weeks, things are making a big improvement. First of all, the potential ceasefire between Russia and Ukraine has significantly lowered the equity risk premium for China. And then the symposium that just happened on the past Monday sent a very loud and clear signal to the global investors that the Chinese government is affirming the private sector as a central pillar for economic growth. So that's a very big signal that we should pay attention to. And again, last but not least, the technology breakthrough. I think this serves as a wake-up call to global investors that China can continue to not just participate, but also to lead in the global technology competition. So this will improve China's investability assessment and also make investors to reappreciate China as a investment target, as a growth economy.
Yeah, there we go. I think Since you mentioned technology and the importance of AI actually would have been very helpful. I just need to correct myself. I know I seem perfect. I'm really not. This is a good example of that. So just to correct what I said earlier on, the MSCI target from Morgan Stanley was from 63 to 77. I will not name the bank that has that 80 plus target on MSCI China. But you know what? We're human. We're not AI. Go ahead, Rebecca. You have a question.
Let's talk more about human risks here.
Yeah, why not?
And let's talk about President Trump. So you're talking about a structural shift behind this call. To what extent are tariffs a risk? And do we assume that the developments in AI and tech, do they offset the risk from tariffs?
So we're not saying that geopolitical risk is entirely going away. That's definitely not what we are saying here. So far, I think it's the overall global geopolitical environment improvement that's serving in the favor of China for the time being, right? So we want to see further incremental bilateral relationship improvement between US and China specifically. So far, what had happened is the reciprocal tariff proposal from the US side, which seems to be targeting a lot more trade partners with the US. Whereas at the beginning of this year, global capital market was looking at China as being singled out for tariff pressure. So I think things on the Delta side, on the margin, is definitely serving in China's favor. But for example, from here onwards, if the bilateral relationship between US and China can improve, and what could signal that, for example, the two presidents meet, and if some of the existing tariffs or the tech restriction can be removed or alleviated, that would make us further incrementally more positive. And of course, we are not changing our macro view on the deflation side. We are still saying this year for the entire China economy, it's likely to deliver just a slightly above 3% nominal growth. So we are not forecasting a very significant earnings growth improvement at this point. So any earlier signs than we originally expected in terms of China getting out of deflation, that will also make us a lot more bullish than where we are now. But structural improvement, very significant, underappreciated by the global investors. This is the signal we want to tell the capital market, and I think investors should really pay attention to this structural shift.
That's the message. How receptive is the audience, though, to that? The foreign investors, who's buying into this rally? What are the conversations you've had this week?
I think I see a very clear sentiment improvement. Frankly speaking, so far, the rally has happened very, very fast, effectively since late January, right? So we're not even 1 month into the recovery rally yet. And based on our analysis, the data shows a lot of the incremental liquidity actually has been coming from the southbound flow. Yeah. Year to date, already $25 billion worth of southbound flow has come to Hong Kong. And then the local, more regional and China dedicated funds have participated a lot. But if you look at the active funds or the passive funds based in the US or in Europe, they have not really participated at all. I think the change on the geopolitical front and the breakthrough of the technology innovation happening in China, and also the symposium, which only happened 3 days ago. Yeah. So I think it's just happening too fast. Investors are still very much underweight on China, so there's ample room for them to increase their allocation from here.
When you talk about pounding the table to sort of get this message out to foreign investors, to what extent are we talking about a slightly different cohort these days? I mean, is the assumption that we're not going to see US capital or long-term US capital returning in droves? This is more about European capital, the Middle East, and so on?
I think it's less about geography sort of division, because over the last 24 months, we have seen US investors participating in a number of short-lived rallies. I think it's the nature of the investors that we need to pay attention here. The previous rallies, I think for a few times, it was purely driven by the relative cheapness of China, but we thought the cheapness had good reasons behind those, so we have always been skeptical about these rallies, and they turned out to be short-lived, right? And there was some speculations around policy direction shift, which you know, Morgan Stanley has always held a relatively more moderated view towards how much government wants to put in terms of fiscal and monetary stimulus. But this time, I think what we want to see would be longer-term long lease and more strategic allocation to come back into China, whereas the previous rallies, I think, for U.S. investors who actively participated, what we saw is the hedge fund crowd and the macro funds who tends to capture the macro signal earlier. But this time around, it's more bottom-up, it's more structural, which may not be fully appreciated yet by them. So we want to see longer-term money, more strategic allocations from a top-down perspective.
I'd like you, in fact, if you could just explain that even further, this micro bottom-up self-help mechanism, because it's not a macro story. What does that mean? What do I need to look out for on a sort of micro corporate level if if these conditions can continue?
Yeah, a few checkbox can be ticked, right, over the last 12 to 18 months and even for longer period than that. What we mean by self-help is what companies are trying to increase their earnings growth and to enhance their shareholder returns even during a very tough macro environment. What they have been doing, particularly led by the large internet companies and some of these high dividend yield companies, is they try to cut costs very, very aggressively. And they try to increase their share buyback plans and they make it very clear to their investor universe. And then they continue to pay very stable dividends. So the stable cash returns for investors in a very volatile and deflationary environment had been proven to be very reassuring. And so these stocks, for example, Chinese banks and the large internet companies as a sector, they actually have been outperforming the broad market. So that's what we mean by self-help. And we expect this trend to continue to happen because the investor universe has been very well educated that the Chinese corporates as a whole have already embarked on this journey to enhance shareholder returns instead of purely going after growth at a very high speed. So there is quality improvement on that front as well.
Okay, so we think about the micro bottom-up self-help story. What role does the MPC play in that, if any?
Yes, we actually have a relatively moderated view going into MPC. We're not expecting a bazooka kind of a fiscal package to be announced at MPC. What we expect is about 2 trillion RMB worth of fiscal package that will have certain dedication to stimulate the consumer spending and also with more effort to continuously boost the infrastructure construction. And we do not expect a very major stimulus to the property sector at this point. So I think, this is not a major part for our upgrade call. Again, this is not a bet on macro policy shift from the government side. And this is why we are more convinced and we have higher conviction this time about China going back to the center of the global investment universe and also gaining more conviction for longer term sticky money, strategic money to come in and reassess China's investability as a global technology leader, as a global investment destination target for stable shareholder returns. Those will be what keeps the investors in China market for longer term.
So 2 trillion yuan, and that is quite a modest view that you're taking to expect from the MPC. But do investors, I'm thinking particularly, in fact, both foreign investors and onshore investors, is their expectation aligned with that? I mean, are we going to see a disappointed investor following the MPC if we do see a more modest package like that?
That's a very good point. So we have a more cautious view on earnings growth, which is more highly correlated with the macro environment. So we are expecting only 6% earnings growth for MSCI China for this year, and followed by 9% next year. We do expect China to gradually come out of deflation at some point next year. But if you look at the consensus numbers, they are expecting 9% for this year and 12% for next year. So they are slightly higher than ours. And if you look at the onshore Asia market versus the offshore market, the Hong Kong market specifically, you do see some divergent performance over the last several weeks. And you actually can see that from the most recent earnings results. Actually, for MSCI China, we're seeing a higher percentage of positive earnings alerts, whereas for the Asia market, it's still more dominated by negative earnings alerts. So this divergence of performance in the near term, we think is likely to continue. But for the rest of the year, we think Asia market will have a decent chance to catch up because, number one, they do have a very large variety of technology-focused stocks that investors can choose from. And number two, global investors' positioning in China, Asia market has already dropped to the lowest level since 2018. So there is ample room for them to increase allocation there. And number three, the AH premium, the valuation premium for A shares versus the Hong Kong market is coming down quite quickly. So as it starts to go even further down, I think the relative valuation attractiveness will finally appear.
Okay, Laura, fantastic to have you. Thank you so much for joining us this morning. Laura Wang, Chief China Equity Strategist at Morgan Stanley there.
解说君备注：通过劳拉王的分析，我们看到了中国股市的显著结构性变化。这不仅是股市质量的提升，更是投资者心态和市场生态的转变。从过去12到18个月以来，越来越多的中国公司在提高股东回报方面采取了积极举措，通过股票回购和增加股息等手段，彰显出自下而上的股东价值提升。这种趋势不仅限于传统行业，而是有更多高质量、低周期性的公司在逐步崭露头角，取代那些受制于通货紧缩和宏观经济压力的传统行业。与此同时，技术创新、 尤其是人工智能领域的突破，也正在成为推动中国经济增长的新动力。劳拉王强调，中国在技术领域的领先优势，结合深厚的工程师管道和完善的生态系统，不仅仅是在追赶全球发展潮流，而是处于全球科技竞争的前沿。这无疑为投资者提供了前所未有的机会，尤其是在全球科技创新大背景下，中国如何继续保持技术优势成为了一个值得深思的问题。然而，尽管这些结构性变化和技术突破给中国市场带来了潜力，但市场的实际反应却远未达到预期。劳拉王指出，虽然市场情绪在近期有所改善，尤其是自1月下旬以来，全球资本市场开始重新关注中国，但欧美投资者的参与仍然有限。这也意味着目前中国市场仍有较大的资金配置空间。这个背后的原因，正如劳拉所说，是中国在经济和地缘政治的不确定性中，逐步摆脱了过度的风险溢价，尤其是在中美关系有所缓解的情况下。但问题也随之而来，在这样复杂的宏观环境中，全球投资者如何准确评估中国市场的投资机会？这些技术突破和股东回报的提升，能否持续推动中国股市走向新的高度？尤其是在全球地缘政治局势依旧复杂的情况下，中国股市能否真正摆脱过往的通货紧缩阴影，实现经济的长期增长？从劳拉王的讨论中，我们得到的启示是，投资者不仅要关注短期的市场反弹，更要着眼于中国股市正在经历的深层次结构性变化。这些变化或许在短期内还未完全被全球投资者理解和接受，但正是这些变化决定了中国市场未来几年甚至更长远的投资前景。对这个话题有不同观点吗？欢迎留言一起探讨。